Hey, yo, what is up, family? How y'all doing? Hope it's a wonderful day. Listen, today we're going to go over a little bit of institutional trading, more or less institutional candlesticks or order blocks or smart money blocks, smart money concept order blocks, whatever you like to call it. Sure enough, we're going to just look at where pretty much institutions are playing and where they're going to look to come back to. And we're going to first off probably start off with a little bit of retail trading as far as the aspect. That way, we're kind of might help some of you guys understand why instead of thinking what you think is going to happen is why they come into that actual area. So yeah, let's go ahead and get started here. So the first thing I kind of want to do is, as far as like I guess you would say retail trading, you're gonna most retail traders use trend lines. So, oh, this here is a trend line. So let's more or less take it here. Let's say just off of this general area that we have this trend line that occurred from here. So most people are probably looking for it to respect this continuously. So we'll draw that up actually. So let me go ahead and grab a trend line here. This is kind of in my way. Give me 1 second. So I'm actually going to draw myself somewhat of a trend line so we're able to understand this. So let's say we have a lower low, lower high, lower low, lower high, lower low. For an example, this right here starts to be the trend line here between these peaks. So most people are looking for ultimately for price to respect this continuously until, possibly price is broken. Maybe the price is broken here and then we're going to look for this to actually make the move this way into the bullish pattern, which is a possibility and it does happen. But more than likely, sometimes you might see something of like this to where, let's say, you see, for example, how this right here, this extension this way of an institutional move, because ultimately it is a big move that a lot of the institutions had to get in order to push it upwards above this previous support level. If you lose support and resistance, you understand that this is probably the previous support level right here, and we had to come above it, in order for us to actually be able to bounce off and continue. Now, sometimes people will enter here, and then eventually the market will come down here, and people kind of don't understand as to why we came all the way down here, rather than holding the uh, initial higher high, higher low, now to a higher high, higher low concept of, just the basics of trend line type of thing. So if I move this here, this might create a trend line overall this way. And for you guys that might ask, well, why are you showing us trend lines? Because I don't believe in trend lines myself. I believe in trending markets, but I don't like to trade only trending markets. I like to look at more of where price wants to go. And yeah, we're just kind of get into how this actually benefits like this. So one thing I want to say is here, um, at this point, you should continue up, but ultimately, maybe on a higher time frame, this may just be a what you would call somewhat of a pullback, I guess you would say, for a higher time frame. So what I mean by that is, let's say that over here that we had one of these here, and then this here was left open. So now, for any of you that watched my previous videos, you know that I'm into imbalances or areas of where liquidity can be. So let's say that this was the area of liquidity that price came back into over here. And then ultimately, most people are probably thinking it's a bullish aspect, and then we have a serious drop like this, okay? Because the reason why this could be, because this could be the imbalance that's here in order for us to continue the move. Now, sometimes also this can become invalid to where this actually will start the next bullish trend, but sometimes you have to look for where that imbalance could be, or maybe, for an example, there's a double top. So uh, let's say that they created a double top with this one here, okay, and then this one here created another double top, and they left liquidity open with this original move this way. So this could be the reason to fill this in. And we ultimately see that type of aspect with this here. And if you guys look here, this is why I wanted to put that out there, was because originally this here is a double top at this area of this line, and then this is a trend line. So where they could be using this trend line to think that everyone has to sell this way, okay? Doesn't look the best, I apologize, but I hope you guys understand the concept of it. And then you see how ultimately we do this here. We come low, then we make a higher high, higher low, higher high, ultimately coming to this liquidity point above this resting area. And then what happens after that? We sell off again. Same thing here. We come up into this area, we come into the liquidity area, whether it be double tops or trend line, but wherever the market kind of continues to move. So we have lower low, lower high, lower low, lower high, lower low, lower high, lower high. It's a lot of consolidation. Um, so I want to bring that into understanding that, but also something that I want you guys to understand is institutional candles or institutional order blocks. Pretty much what institutional order blocks are is either, and a bearish trend is going to be the last up to down candle. So for an example, what I mean is this is the last up to down candle. This here is a bullish to bearish candle. This is a bullish to bearish move here. This is a bullish to bearish move. And something I want you guys to notice is watch where if I mark off this area of where that's at, you'll see that's where price came back to respect in order to continue for the market to move down. So if I take this here, so let me make it actually see. So if I take these two candles, the bullish to the bearish aspect, and I move that directly over for those two candles, you see how price came right back into it, and then it rejected it, came back into, rejected it. Same thing if I want to do it for the next institutional kind of candle looking. So this one here. So let's move it over here. Second, guys, this kind of. So we're paying attention to these two here. We look over here. We're looking pretty much to the right here where this respected it and then continue down. Same thing with here. This kind of is another, this is actually another institutional candle, this one here. Now, what this could play off of it here. Ultimately, it somewhat does, but it does wick a little bit higher. But the reason for that being for me personally is what I see is this here is a double top here to where they left liquidity for them to come into here. If we look down on a lower time frame, it'll probably make a lot more sense. And we'll be able to see actually, what they really did. A second to find out what they were. Okay. So as we see here, okay, the reason why they came into that area, so this comes into here where this line's at, but the reason they probably came a little bit higher is they knew people originally sold from here. But this matches up with another order block, which would be this one here. So you see how it's like a bearish to kind of to stagnant. So also order blocks can be seen as like pauses in the market. So for an example, you see how this is consolidation. This here is an obvious stall out. So it's bearish, bullish, bearish. You have more order blocks here, which are bullish, bearish, bullish. Okay, and then we have one here that's bearish to bullish. But what I'm trying to say is you understand that all of these, regardless, they have a point of significance, okay? So you'll see between this whole area, the market's kind of just stuck with this here. But if we draw horizontal lines to the right of this, we'll see that every area above and between this is an area where market has trouble either breaking through or it has trouble, it's consolidated or it's rejecting off of it. Okay, so for this example here, we go bullish, we reject off of it with this institutional candle, which is rejecting off of these two here. And then if we go up, we come back over time to reject this institutional candle, but ultimately this one also. Now, you'll see how if we go to the right where this is at, this ends up being the rejection of now when the bearish trend breaks down through. It comes back into these institutional candle areas here to continue the bearish move down. Now, ultimately over here, we come right back into it one more time before we continue the bearish move here. And then the way to kind of look at it is just understanding the significance of the order blocks. Like as we see one here, it will take time for you to see them, but eventually you'll start to notice. So this order block here, it's a bullish to a bearish move. Now, if I move this over to the right, what do you see? It rejects off here. Okay, it plays off of these. So ultimately, you can use these as like entry points because you'll know that it's a fake of a move into the other move or the true move into the retest. So that's how I play it for myself. Um, Other people might play it differently, but for me, that's what I'm looking for. Especially when we have a BOS. And for those of you who don't know, BOS is just break of structure. Let me look for one as like a bearish trend because I play more or less bearish sell-off trends than I do bullish. I don't really like this one here. This is a also, order block area. If you want to call them, can't remember what these candles are called, forgive me. But you see how these are relatively equal. This is undecisive price, so it's an order block in itself. And then right here, look, you see the bullish to bearish move. So this is also another order block. So if I draw here between these, you notice how kind of price respects that. But ultimately, what I'm speaking upon is look for a nicer one that I like. That way, it's just because personally I only trade certain moves, certain candle patterns, and if it's not something that I'll see it, but if it's not one of my strongest points of a confirmation, then I really don't take my trades, and that's just because I like to see a certain formation happen. So for an example, this here, we're gonna box this out. I want to go to the 4 hour, and you'll see what I'm kind of speaking upon. Okay, so you see how this candle here, we have a bullish to a bearish, which this can be considered the retracement from this original bullish move, which most people think this candle here was going to be a bullish continuation. But after we have this bearish engulfing printed here, what I'm looking for is for somewhere of these candlesticks, the order blocks, like I said, to be retouched to continue to sell. Now you see here, it doesn't come all the way into it, but the reason for that being, if I still go down to like a 2 hour, I go down to a lower time frame. Where did I? Sorry, guys. Okay, 1 second. All right, well, I lost my space. 1 second, guys. Go. Oh, sorry about that. So for an example, like I said, it doesn't come all the way back into this, but the reason that it's being is if you look to the left on this time frame, so sometimes you have to go to a different time frame to see them. You see that we have an order block here. See how this block is, these two candles are equal. Now, if I slide this directly over to the right, where does it end up being that the retracement comes into here? Directly over here. Now, although I would have liked the higher entry up here, knowing that this is here, this is something that I will use as a confirmation also. For you to see my fibs, we'll see where the fib lands for me. The fib lands pretty short, so for me, I probably wouldn't have took this. I would have looked for the higher entry. But you see how this order blocks always have a reference of where price is going to be at. So if you want to look for another order block here to the right, this one in here, ultimately, what is that equal to here? This order block here equals to the support of this. So now if you use support and resistance, you can start to understand that support and resistance levels always normally have a order block within them. So if this one here is here, this one here is here, this one right here is going to be the one probably for a future one. So this one here. Let me just kind of add it on the side. So we go over here to the left, we'll see where that previous order block ends up being. It actually blows right through it. So now you can look for this order block to possibly be one of the areas of maybe a support. For me personally, I would probably like it a little bit lower, but where this order block is right here for it to play. But ultimately, it's just a point of interest of support and resistance for me. You can see if we move this one directly over where it's currently at, it's holding price up right now. So it could come down. And then if we move this top one over here, what do you know? So do you kind of see how, remember how I wanted price to come up into this a little bit more over here where this was, but it fell short? More than likely, that's why they're doing this here, because they know people have stop losses above this area, or this previous order block is where I was looking at originally. So there's a possibility that they might do something like this for tonight for a London session, come back in, and then depending on, I know there is news tonight for Euro, well, there's GBP news, but that can definitely, you know, affect whichever way EG goes. So if EG has the outlet here, because you can see the same kind of formation, EG right now. Oops. EG has that same Euro strength. So if it decides to, and then that definitely correlates with what I'm looking for. I'm looking for this high to be taken and this high to be taken. So EG does somewhat similar, comes back up. I mean, I don't know if it's going to do this, but my point of it is being able to see this definitely helps me understand the EuroCAD could possibly do the same type of aspect where they can come up here. But yeah, so that's kind of went off course there, but that's how you guys can kind of use order blocks as support resistance, and understanding that most support resistance are ran off order blocks. The way I like to use them for me is for entry areas. So let's say that for an example, we have this here. So let's say we have 1, 2, liquidity break, the retest, and then I want to look for that here. In a candle formation, this would be a bearish engulfing here. Change this to red. Okay, let's say that the previous candle was a bullish candle. We'll put it as blue. Or we'll just do green. That way it's pretty simple. So let's say that this is the actual order block here. Okay, this is the block where it's a bullish to a bearish candlestick immediately. See how it's bullish? Let's say that we had another one previous here that was equally somewhat bearish. Okay, and then let's say that we have one previously that was ultimately a bullish candlestick. Okay. So let's say we have this candlestick formation. We have bullish, bearish, bullish, bearish, break the structure, BOS, meaning that this was the previous low. It's the previous low. Now we're looking at the bearish aspect. But being that this is the order block area, I'm looking to play off of this last order block area, okay? That's where I use my entry for here, okay? I'm looking for the entry, not necessarily at the neckline, but at the actual order block, okay? Normally, I like to use the 50% of the order block. So let's say that this last candle is the order block. So I'm looking for this area as my entry in order to continue the sell-off. But you do have to pay attention to which way the actual market is moving. So if this is a ultimate, let's say that this is ultimately a bearish trend, and then we have a bullish, bearish, bullish, bearish, and then we have a continuation. And I'm looking for the retest and then the continuation of the sell for the bearish market outlook. Okay, that's kind of how I'm gonna, that's how personally I use, you know, institutional order blocks or smart money blocks, whatever you want to call it. There's so many different names for them, but ultimately it's just pretty much all the same thing. I'm going to go to another pair just so we can kind of look at it. So we can see, you know, if we can see some more, because I do like GCHEF as an area or an actual pair that does respect order blocks heavily. We go to the 4 hour. I like using the 4 hour because it's more of an obvious point. Excuse me. Sorry about that. So the first one I see here is going to be this big old order block. It's a bearish. Get that out there. That's kind of. All right. So this is how it's a bearish to a bullish, and then it continues to bearish. Now, this is kind of that same concept where I'm looking for the 50% of this. But ultimately, what you'll see is where does price come back to after it breaks down bearish? Price comes back into this order block area, okay? And then what does it do? It breaks down and sells, but ultimately it comes right back into the order block again, and then we make our bearish move. But also, what you guys will notice here is within this, if we go down to the 2 hour, you'll see more order blocks. Let's go to the 1 hour, see what it looks like. you'll kind of see more order blocks of where, you know, price is respecting previous order blocks. So for example, this one here, it's being respected by price above it and it pushes up. Now this is being rejected by ultimately this order block right here, this bearish to bullish move. Also, we want to use this area here. I would like to use, I don't really see one that well here, but for me personally, knowing, you know, actual, you know, doing this for this long, I kind of understand where, you know, price is doing. But if I take this order block here, the bearish to bullish aspect, and we move it directly to the right, you can see how price respects it here. Price somewhat respects it here, but it's just a fake out to the bullish, to the bearish aspect again. Same thing with this order block here. See how this is an order block right here, these two here, and then price comes back into it. So probably on the lower time frame, this middle of this candle. So if I draw, for me, I use fibs from here to here. You see how it comes right back into the 50. And then if we go down to a lower time frame, we'll see what that actually looks like. So you see how it kind of comes bullish, then bearish, and it comes back in, and then it continues the bearish aspect. So that's kind of how I see it. That's how I use it. That's how I like to, you know, kind of justify where my entry is going to be at. And ultimately, you'll notice the order blocks are pretty consistent with whole numbers. So I will go, I have not yet, and I need to do this next time, but they'll be with whole numbers. So where the bodies are at. So you see how this here could be 70. 70 is the whole number, the institutional order. This one could be 510, being the bottom of this here. So you'll see where institutional candles lie is also where institutional numbers lie. Institutional numbers are such as 0, 20, 50, 80, and 100. Okay, if you think of it as that point. So let me just mark a couple more off so you guys can get maybe a little bit more information. So let's say for the top of this one to the bottom of this one here, you see how it's 404. If I want to just drag it maybe a couple more digits down, it's going to be 400 even. If I want to drag this one here, I want to drag it to 30. It's going to be an even number. So you kind of see how institutional order blocks also make institutional numbers match up. And ultimately, the charts are ran off of algorithms. So ultimately, algorithms are numbers. So you understand why these numbers on the side are important and why they become points of interest in order to sell. You can trade institutional to institutional order blocks or numbers. I have friends that do it. I use them, but it's not just my one confirmation, but I do know very successful traders that trade order blocks to order blocks. Order block, buy from here. So next order block up here, which would be, so this order block here, down here. This area right here is kind of an order block for me. To the next order block, possibly, we'll just say the top up here, okay? It does come higher, but you get the point here. So from here to here, that's probably maybe 70 pips, 60 pips. Correct me, I'm probably wrong. 70, 80 pips. So this is a big move here. So you can create order block to order block, order block to order block. So it is a way to trade, but I use them for my entries, confirmations of where the market might go or might turn direction. So I hope you guys got some information. Maybe, you know, if I will do another video pretty soon on a little bit more in depth to it. But this is how I look at order blocks and how I use them. So much love, peace. Have a wonderful evening, day, regardless of what time zone it is for you guys. Peace out.